Well, the death toll from coronavirus is now at over 900, surpassing that of SARS. Here are some of the latest related headlines. Princess Cruises confirmed 66 additional cases of the virus on board one of its quarantined ships off the coast of Japan. Foxconn was forced to shut down production of Apple's iPhone at its flagship Chinese factory over concerns about coronavirus. And a new note from Goldman Sachs yesterday says to expect the impact of the virus to start showing up in economic data in about 2 weeks, giving us a read on global manufacturing sentiment. Joining us with more on that is Anjalee Khemlani of Yahoo Finance. And from Washington, we've got Calvin Schnure, Nareit senior economist. So let's start with Calvin in D.C. Calvin, what are you looking to see in terms of economic impact, especially as people originally were saying that this wasn't going to be at SARS levels?
Well, there are a couple of areas that you'd be worried about. A lot of the headlines that you see are about the shopping malls being empty in China and the local economy being shut down. That's going to be have a big impact on China and around the surrounding countries, South Korea, Japan, Hong Kong, Taiwan. That's really not going to hurt the U.S. economy very much. A second thing that might happen, that probably will happen, is it's hurting travel. You see that the hotel stocks are down quite a bit over the past month. But keeping in perspective, there were 3 million Chinese visitors to the U.S. last year. That's only 4% of the total. You're likely to see some impact, but even if there's no visitor from China for 3 months, that's only 1% of the total. That's not something that's going to be, a 9% hit to the stock market. The biggest risk you just mentioned is the supply chain. A lot of tech firms, iPhone manufacturing rely on critical components from Chinese factories. We don't know what types of inventories the producers have or how long this is going to go on. That's going to be the area that's most critical for the U.S. economy.
To go back to travel for one moment, though, I mean, yes, maybe you're not going to have Chinese visiting the U.S., but isn't the effect much larger than that? I mean, you're talking about U.S. companies, the cruise line operators, for example, that even if it's not cruises that are Chinese citizens traveling, it's profits that they bring back to the U.S., right, that are now going to be constrained, or the airline company. I mean, you could really say that of any of the kind of travel sector.
That's right. That's true. There will be impact beyond what I was saying of the direct effect of China visitors to the U.S. Cruise lines are vulnerable. Airlines are vulnerable. And we have yet to see just how much it's going to spread. There's a potential that it could be much worse. But right now, the stock market is pricing in a pretty bad scenario for what's going on in the hotel and entertainment sector.
And going back to the supply chain, we're looking at just how many workers are not, reporting for duty every day. We see more and more news coming out about quarantines and about, restriction on movement, and about even now there's reports that, China is going to be warning its citizens who aren't quarantining themselves, taking them into camps. So there's a lot of restriction in the area in a country which is clearly such an important economic factor for a lot of other countries. And we still haven't been able to get a number on that right now. And I know that we're going to be looking at maybe the next quarterly earnings to really see those numbers come out. But what are your thoughts on that right now?
Those are very alarming trends. That's what I'm most worried about, is how long these factories are going to be shut down, what alternative suppliers there are. A lot of these tech products we've been seeing for the past several years, there are not a lot of alternative suppliers. This is a vulnerability for the U.S. economy. It's not enough of a vulnerability to cause a recession, but it certainly could hit the tech sector, some of the sectors that are using the tech sector, but we really don't have the information, and it's going to take a couple of months before we really see it.
Hey, Calvin, Kristen here. So I want to actually ask you about real estate. So I know that Chinese investors on U.S. real estate has been declining, but still makes up about 20% of the foreign investors that we have here. Do you at all see this impacting the real estate market here, or could this even be a boost to American buyers because of the lack of competition?
The U.S. commercial real estate market actually has very solid fundamentals. Across most property types, you have low vacancy rates, you've got good rent growth, and prices continue to rise through the end of the year. We have data through December. Chinese investors have been an important buyer of U.S. real estate, but there's a lot of money looking to invest in real estate at a time like this. Why? One reason is because U.S. real estate isn't as exposed to these global factors as a lot of other companies. We were just talking about the hotels, the airlines, the sectors that have a lot of exposure to China. A U.S. company that owns office buildings, that owns commercial real estate, shopping malls, it has very little impact. The REIT sector has actually performed quite well relative to the broader market at a time when you have these heightened tensions overseas. So, no, I don't see this coronavirus really affecting the U.S. commercial real estate sector. It's a bit of a safe haven for investors.
Which sector do you think is doing a good job of bracing itself or taking the right steps in order to plan for if this does last a lot longer? Because we keep hearing that, it's because it's contained to China, it's not going to have as large an effect. But it seems like as the days pass and the numbers rise, it's starting to look like a longer road ahead.
It's pretty early to tell who's doing well preparing for this. I would expect most corporate boardrooms are having regular meetings saying, what are our potential exposures? What are the things do we not see coming that could hit us? What are our strategies for dealing with this? It's too soon to tell, not just the business impact, but we don't even know the full medical extent of what we're facing yet.
All right, very good point. Calvin Schnure, Nareit, senior economist. Thanks for joining us today.
Thanks for having me.